Stan Gregor is the CEO of Summit Financial, LLC. With over 30 years experience, Stan has operated in banking, private wealth management, investment management, fiduciary trust services, fixed income trading, investment banking, retirement services, insurance, financial planning, and public finance. He has also been involved in acquiring and integrating some of the largest and most complicated banking, wealth management, insurance, and capital markets businesses and cultures with a track record of increasing productivity, profitability, and shareholders' value. I mean, he's been, prior to Summit, he was at Cantor Fitzgerald Wealth Management and Wells Fargo and Covia and, all these great firms. He's led them. We met many, many years ago back in his Cantor days, and I've had a great relationship with Stan over the years. Stan, I'm so happy to have you on the DealQuest podcast and the special series we're doing with the RIA aggregators and integrators. Welcome.
Thank you, Corey. Pleasure to be on. Thank you.
Awesome. So listen, I want to get into Summit's model and all that stuff and have you let the listeners know, what the opportunity is. Obviously on this series, we've been, having various people on, so that the great thing is that there's all these options out there, and then there's even more confusion because what's the difference between all these platforms? And I know Summit has its particular value proposition. And so I want to give you the opportunity to talk about that. But before we go there, I want to take you back to when you were a little kid growing up, because my guess is, what did you want to be? Because my guess is that being the CEO of these various financial service institutions probably wasn't it when you were 8, 10, 12 years old, but you tell me.
Oh, wow. Great question. Well, I grew up in New York City. Both my parents are from Europe. So I'm the first generation here in the US. And what I knew growing up is, Corey, I did not want to be poor.
Yeah.
we grew up with, a very tight budget. It was not an easy upbringing. Both my parents worked. It was hard. It was a hard upbringing, and I watched my dad, especially. He was in a restaurant business, working multiple shifts just to pay for our school. And oddly enough, we went to private school. So I went to a Catholic undergrad elementary school, then to an all boys high school, and that was tough. And then going to college, I watched how they struggled to get us through that. And I just knew I wanted to apply whatever I could from a skill set and do something where I could make them proud. I could provide for my family. And frankly, how I got here was very odd. I decided when I was in college, I was going to law school.
Okay.
And just a few weeks before graduation, I did a complete shift, and I told my parents I'm going to Wall Street. And my dad just held his forehead and said, "Oh my God, well, how did that happen?" And I started as a retail advisor, and just dialing phones and getting out there. And I loved the business. I loved the fact that you can help clients and you can change their lives, and working for some of the big national firms. I mean, I spent a decade at Citigroup.
Yeah.
And you think about that culture, and anybody that works for these big national firms, you're almost brainwashed in bigger is better, right?
Yeah.
And you can beat anybody up and win business. And probably 25, 30 years into it, I said, wait a second, I'm working for these big firms. It's not always the best way. They're large, but so many bureaucratic conferences that you have. And, we used to have meetings for meetings.
Yeah.
So, going independent was really where I wanted to go. And I knew I wanted to be some kind of a business entrepreneur. I didn't know how, Corey, and what that looked like, but the upbringing of my parents, the working for the big companies, I wanted to somehow be a business owner to some degree.
Yeah. Good stuff. And one other question, looking back, what was your first deal of any type? Could have been early in your career, or something even earlier as a kid, or something, whatever comes to mind that was a deal of any type.
I think the first deal was winning my first piece of business when I was a commissioned advisor, right? I mean, that was the real business deal. And, you start off with a book of zero, and you have 30 days to get a paycheck. And winning that first piece of business was, in my mind, wow, this is how it's done. And then you try to refine it over and over again. But that's probably the first deal that stands out. I remember the client too. I remember the transaction. I thought $100,000 was a lot of money back then. And oh my God, I won $100,000 account.
Love it. I love it. Listen, so, it's an interesting perspective, right? Coming up through the ranks, so to speak, and all the different aspects of financial services that you've been in, because now you bring that to Summit Financial. And as I said in the introduction, there's so many different models out there, and the industry has matured significantly, the independent advisor industry, over the last 15, 20 years, and certainly over the last 5 or 10, but is far from, mature. I think we got a long way to go. But the great thing about the different models is, as I said, is that there's a lot more options than there used to be, but also some advisors who are looking to sell or join, are trying to figure out the differences. So talk to us a little bit about Summit's model. And I know you have a couple of different options for how people can affiliate. So
Right.
let's talk about those at a basic level, and then we'll get into more detail.
Yeah, yeah. Well, I mean, for starters, Corey, it's complicated, right? I wish it was easy, and I think any advisor that's listening to any of your podcasts or trying to make a decision, do I stay at a wirehouse? Do I leave? It's scary because there's a commercial everywhere, right? Every firm's promoting what they do, and they got the cure for cancer and all that good stuff, right?
Right.
The model here at Summit, I mean, I stumbled on this place. My friends over at Merchant, we were looking at investing our personal capital into deals, just like some of your guests that you have.
Yep.
And Summit came along as a fluke of, hey, can you speak to us then and take a look at our model, and what do you think we should be doing? And when I looked at the business model, I mean, they've been around for 35 years. They built multiple businesses under one umbrella, right? A financial planning company, an insurance company, investment management company. But what they lacked, which we see over and over, is access to real capital, right?
Yeah.
Access to real capital, access to a fully integrated support mechanism, whether it's technology, operations, being independent, right, has created this feeling of freedom for advisors. But when you go independent, you realize, oh my God, I have to be the cable repair guy, and I have to fix this on my own. I'm running HR, I'm running technology. It's not easy. So we made an investment, and I pretty much made a decision. Not only will we make an investment, I will be here to run the company, protect our investment.
Mhm.
And that's what we did. We spent the first 4 years completely shutting down any kind of recruiting. We didn't want to recruit with the mindset of somebody joins and then they have to integrate and move. And we were deliberate. We wanted to make sure that if you were an advisor working at Summit or joining Summit, do you truly have the tools to be independent, control your business, run your business, deliver the level of experience to your clients that you want to deliver, yet have the team behind you, almost like that Verizon commercial where the guy's standing with a ton of people behind him.
Yep.
But we didn't want to get in the person's way. We didn't want to say, here's the t-shirt you have to wear, here's the brand you need to have. That was not the model. So that's the difference. The difference is it's I would say it's independence, but you're not alone. You're fully supported. The other big piece, and really it's why we made the investment. The biggest part was we realized that Summit is not just now it's a 40-year firm, but it's not just a firm, it's a partnership. And look, I spent a decade at Citigroup. I was part of B of A. I was part of Wells, Wachovia. You mentioned Cantor, on and on and on. At every one of those firms, there was so much transition. People would join and leave, like the doors were always spinning.
Yeah.
And what really intrigued me here is that so many of the advisors here have been here 35, almost 40 years.
Yeah.
And unfortunately, when it comes to people leaving, it really is leaving this earth. I mean, most of the people that are no longer here, that are, I say, attrition of the firm, most of them passed away, which is, it's sad. But I've never known or worked for a firm where people just didn't leave. I mean, it was foreign to me. So the partnership piece is it's hard to articulate because nobody believes you. Like, what the heck does that even mean? But the partners, they get together once a quarter, which is on their own. There's no management telling them you have to do this. And they take 2 days out of their work week or their month, really, 2 days out, and they just share ideas. Here's what's working, here's what's not. Hey, I'm working on a large case. What do you all think? So that they're kind of an advisory committee to each other. And that I found so different. And Corey, when I go back to advisors and say, you've been here 25, 30 years, what stands out as being different? That usually is in the top 2 or 3 responses they come up with. Like, it's either number 1, number 2, or maybe number 3. With the new folks coming in, they say it's the same thing. Stan, you mentioned this happens here. I kind of brushed it off, and it's really a value add. And We have our annual meeting in another 3 weeks, and we have a number of our newer teams that are here less than, call it, 3 years, presenting at that offsite, and they're going to discuss really what they're doing different that people can learn from. But they're so excited to hear again what the other teams are doing. So it's the
Yeah.
power. It's that culture. It's a power to partnership. That's really it. I mean, that's the biggest piece.
Love it. Love it. So obviously I'm going to ask you some questions that I happen to know the answer to, but we want to make sure the audience knows them.
Yeah.
So you alluded to this a little bit. So let's dig into it a little more. It's somewhat artificial distinctions we've been making, but we've been talking about the aggregators versus the integrators, right?
Mhm.
So for example, I mean, the last episode before recording this that we released was Mariner and Marty Bicknell, and and Mariner actually moved from a more aggregator model into a more integrator, one brand, one Mariner model. We've had others on who are much more in the aggregator side. And, so what you've said so far is the support with the independents, right? So let's talk about some of the things, that go into each side of that, right? In terms of branding, in terms of ADV, in terms of, what is consolidated decision making, that kind of stuff. Break it down a little more as to where the Summit model falls.
Yeah, yeah, and Marty's done a great job. Marty's a friend, and I follow him, and I think what he's built is amazing. So just hats off to what he's created as well. So what a lot of times I start off with, what don't we want to be, right? And we don't want to be an aggregator. This is not a buy a piece of the business, throw somebody in, just scrape some profits, revenue up. That's not the model. I've been, I guess, fortunate and also thrown into a lot of these large businesses, frankly, at a point in my life where I was younger. In many cases, being very honest, I was scared, to the end of the earth, like, oh my God, I don't even know how to run a mortgage company much, but I know what a mortgage is, but I mean, the mortgage company reports to me and
Right.
so forth. So I had all these businesses that you kind of learned, by being thrown into them. And I realized this thing that kept happening over and over. People that are successful don't want to be told what to do, right?
Mhm.
They want to be given the tools that they feel they need, have access to them, and almost like going out to a restaurant where you pick what you want. You don't get jammed down your throat what you want. So that's kind of the Summit model. We simplified the things that we know people really don't want to do, right? Having your own ADV versus not. Okay, I'll be more than happy to sit down with anybody. Tell me the value of I have to have my ADV and do everything on my own versus you could do everything on your own and don't even worry about that legal piece. Just operate. You can use your own brand, but operate it under the regulatory arm of a big parent company. And in many cases, we have that discussion and the person goes, oh, I always thought I wanted to have my own ADV because people told me that. You can, but here's what goes with that. So we definitely do not force a brand. I would say roughly 60% of our teams use the Summit brand, 40 use, their own brand, the Stan Gregor group, right? But
Yeah.
that's pretty synonymous if you look at the Merrills, the Morgans, and so forth, right? The Stan Gregor group and so forth. So we built an infrastructure for the advisors that's on 180V, all the tools, all the bells and whistles. Like, I mean, technology is, we spent tens of millions of dollars on technology, getting that to integrate with the custodians and the performance reporting and the CRMs and you name it. If I'm an advisor, I don't want to do that. Like, I
Right.
want to deal with my clients. And the story. Every technology company salesman tells you it's all turnkey until you get it, and nothing's turnkey, right? I use the analogy of it's almost like somebody tells you, "Hey, you want to buy a Ferrari? Great." And then UPS shows up at your house with 250 boxes, and you're like, "What is that?" They
Right.
have your Ferrari. Go put it together. We didn't want to do that, so we learned the hard way of what does an advisor truly want and need, and we built it. We built those services around them. So the technology, the compliance, the HR, operations, fully integrating those services. And then we put the people piece around it, right? We have an investment team, just like Marty has, right? He discussed that as well, right? We have an investment team that does the research. We have an investment team that helps you design cases and portfolio design. We have a team that actually manages money. Summit as a firm, we have a team that manages billions of dollars on behalf of the advisors. Most of that is custom models, custom portfolio. We also have an insurance agency, which is almost 40 years old. It's a massive agency that has been around for a long time. There are multiple options an advisor can choose from. And then we built a servicing arm too on the insurance side, right? So in addition to having an agency, there's a servicing arm that takes everything from the advisor off their plate. We'll go schedule paramedical, we'll go fight with the underwriters about rating and whatnot. The advisor keeps himself out of that. So we'll even help you design the story or the pitch book for the client if you need. That team will do that, to collecting premiums. And then the culture of collaboration, I call it the partnership culture, right? That's the people. That all wraps it around. So I would say most advisors will tell you they are independent, which they are. Our ADV spells it out. We don't have contracts we are locked in here. It actually, if you read our ADV, it will state that we're telling the client, if your advisor chooses to leave, not only will we not block them, we will give them all your information, right? Unless you tell us in writing ahead of time you don't want it. So what we say we mean. This is not you bring a guy, a gal in, and then you trick them on their way out. No. If people want to leave, they should have full freedom to do that. And it's in every one of our contracts. It's in our ADV. It's completely spelled out. And if Summit is not adding value, you shouldn't be here. You really should go do something else.
So it's like, I mean, I love that. So there are a lot of aspects of what are more of an integrator model, right? One ADV, all these support and services, et cetera. However, there's the ability to have differentiated branding, and also obviously people can come and go as they please. As you said before that, it seems like the only way people do go is in a pine box, right, or whatever. But they could leave, right? So I mean, that's impressive that nobody is legally stuck there, right, on your core model, but they choose not to leave anyway, which is great. And then, the other distinction, right, is, for example, at this point, and we just happen to be using Mariner as a contrast, but we've talked about so many others, but just because we've been using them, right? At this point, they do 100% deals, right, in terms of acquiring everything. Summit's model is different in terms of who can be on the platform, right, and how much equity you may or may not take in a firm. Talk about that a little bit. Yeah.
So again, it's the flexibility feature. We're working right now on 4 or 5 firms where we are buying 100%. Okay. Yep. So most of the teams that we see, Corey, are somebody's coming in, they built a successful practice. I will hear one of two things. I will hear, I'm frustrated where I'm at, whether I'm independent or I'm working for the big bulge bracket firms. I don't have the capital to do what's really, what I know I need to do. I can't acquire the guy down the road because I know he's retiring. I'd love to buy his, so I need money. I need capital, and not just so I need the capital, but then I need the support. How do I get the assets here? How do I do the transition? How do I service that book? And also capital. I don't intend to run the whole thing myself, Stan. So I have to bring on a team, and there's a lot. So the financial piece is usually a big stumbling block. Okay, so that piece we solve, right? We can do a piece, and most of those folks that come to us are saying, I don't want to cash out today, right? I want to be here for the long term. And the model here again is unique. When myself and the merchant guys discussed how do we create this model, I will give you exactly the conversation we had. It was a week before Christmas. We were sitting in New York City. It was a cold, snowy day, right, which is not unusual. And I was with Tim Bello, Mark Spilker, Scott Prince, myself, and Mark said, for this next chapter, let's create a company that we build it as if we're building it for our kids. And that sounds a very common theme. Okay, great. Yep. What does that look like? And when we started looking at, okay, we have the access to our personal capital, which is how we've been funding these deals, right? We started having this discussion, and the conversation sounded something like this. Hey, Stan, you have 2 kids, right? You have 2 sons. Would you tell one of your sons, either one of the sons, to sell their business today to dad, right? They're 30 years old, right? Would you say sell it today, knowing they're going to work their tail off for the next 5, 10, 15, 20 years? And then dad does some kind of monetization. Dad makes all the money. And hey, son, attaboy, thank you for selling dad the business. Or would you do, which is our model, where you sell a minority piece, which just gets you kind of in the game. So you have skin in the game, you have access to the partnership, you have access to all those services. And when and if, and only at that time, when and if there is monetization, at that point, you sell whatever percent you want to sell to the IPO company or however we monetize. To me, it's a big difference, right? I didn't want to do the first thing. I would never do that to my children. And if I would never do it to them, why would I do it to a partner? It kind of goes against the philosophy. So you mentioned minority versus whole business. If somebody is of the mindset they really want to grow and be there for long term, I encourage them, sell the least amount you can and go grow the heck out of it. Use the Summit resources to your fullest capacity. And when that time happens, and not until a time, you're going to keep your business, right? At that time, you decide what you want to sell. You want to sell 10, 20, 40, whatever that number is. That's your call. So that's one side of the spectrum.
Yep.
The other side, which seems, I don't know if it's because of COVID, but in the last, I would say 12 months, we've seen a lot more come to us, which is, hey, I want to tap out in 2 years, Stan. I really want to, 2, 3 years, I want to tap out of this business. I want to buy the whole business. So we're having those conversations. And with those conversations, it's either a G2 person that is with that firm being sold or that we're acquiring,
Yep.
or it's somebody within Summit that would love. I mean, we have guys raising their hands every week. Hey, where's the next deal that you're working on? We'd love to be part of it. So
Yep.
It's really a balance. I didn't expect the second piece, which is full acquisition, to become part of our model, but it's kind of landing in our lap. And as I said, we have a number of them in this pipeline right now that we're probably going to move forward with.
That's great. So you mentioned G2, and that's a conversation I've had with the other CEOs, of the various integrators and aggregators, because, G2, G3 always raise some interesting opportunities and also sometimes some challenges, right? You got senior guy,
Mhm.
and then you got a G2. They may, at different stages of life, maybe looking for different things. One senior guy or gal may be looking to more to cash out sooner. The others have a growth opportunity. So, you've already said, I mean, obviously a model in which you don't have to buy everything, right? Where you're only buying a piece gives the one of the advantages, gives that G2 the opportunity to continue to grow. Talk a little bit about, I'm sure you come across, I mean, everybody in the industry comes across these situations. And then it sometimes is complicated by the fact that sometimes G2 controls more of the business than they've been equitized on, and that becomes interesting. So talk about how Summit makes it attractive for G2 and how you get by some of those differing interests between the founders maybe and then second and third generation.
Yeah. It's funny. I would say of our founding members, a quarter of them have G2, which are their children in the business. And there's a little bit of a dilemma there of, hey, Stan, I want to step out of here at some point. My son can't afford to buy me out, right? How do I do this, right? And I don't want to sell it to him at the same multiple the business is truly worth. So this has been coming up as a great opportunity where we get to basically take a minority stake in that business. We give the dad really what is a more than a fair multiple. Plus, he gets to participate in something that may or may not happen in the future, and the son gets to run the business without strapping the son with what I call the student loan acquisition model, right? Where
Right.
you're just paying the buyer back. So that's critical. There's also a number of situations where we've been speaking to. It's not the family. It's truly a G2 person that's been a loyal soldier, right? Been with that firm, doesn't have the resources, does not have the capital to do that. So in some cases, we will make an investment in the seller to some degree, but we will also finance something for that G2 person that can't afford to do it. And that's really a custom deal. Our model has not been let's make money in the financing. Our model has been let's have people grow. Yeah. And you and I have had this discussion. Look, I spent the first 2 decades of my life working for the bulge bracket firms where we made the bulk of our money on just scraping, it's the nickel and dime concept, right? I hate that. And most advisors hate that. Just treat me fairly. Tell me what something costs. If it costs 5%, okay, I pay 5%, but stop with the nickel and dime stuff.
Yeah.
So we built a model around that to keep it simple. Financing is one of those examples, right? I mean, we are investing in the G2 person to grow. we're not making an investment so we can double and triple our, lending facility. That's not the model. We want to see that G2 person really grow the business organically, and that's what our focus is.
Love it. So let's talk about the funding a little more. You mentioned merchant several times, and obviously we know them well, and some of your own capital. Has that been the source of funding for Summit, or have there been other funding? And also looking forward, you mentioned maybe IPOs. So obviously what's happening in this industry with the integrators and aggregators is that they're taking on capital partners, right? Private equity has come into the space. They would never have that kind of money before, certainly last decade, and last 5 years has really taken off. So what's been your funding strategy so far, and how do you see it going in the future? And then what is is IPO the desired exit? Do you have a plan for that? What are you thinking?
Yeah, great question. So right now, 100% of our financing is our own personal capital. Okay, so we do not have any private equity. We do not have any loans from any kind of banks or anything like that. 100% of the acquisitions has happened by the partners.
Mhm.
I'm in a unique situation because I'm conflicted, right? I'm a shareholder of Summit. I'm a shareholder of Merchant Capital, which is one of the funding arms. I'm a shareholder of Merchant, so I'm in all of those. But for larger transactions, we're leveraging the Merchant ecosystem. So when there is a capital call, I'm also stroking a check for that as well. Within the Summit ecosystem, I mean, we try to run a smart company. We keep a pretty decent chunk of cash on the balance sheet. We don't swing for the fences for home run. And it's 40 years of being in business is not luck, right? The partners have done it, I think, the smart way. I think between myself and what Merchant brought to the table, I think we fortified them that there's going to be another 40, 50 years probably, right? Hopefully, right? That the company's around and growing. So we're just not, I guess from the Merchant side and my side, we're not fans of what you've seen in the marketplace is just putting a ton of high debt out there and or even like a private equity player where there's a gun to your head. You have to flip this thing in 3 to 5 years. That's not the model.
Yep.
The model is at some point we will look for some kind of monetization, whether it's an IPO or something along those lines. What I can assure you is that there's not one partner here that would ever want to go back to work for a big firm again. So a monetization will never look with selling to a B of A or a Goldman. I mean, that's not going to happen in this model. I mean, everybody would just leave. I wouldn't stay there, and neither would anybody else, right? But there is a focus on continue to give the partners resources to grow, and then when there's an opportunity for some form of monetization, and I'm not talking about you just tap out, right? I'm referring to something where you can continue to build your net worth by growing your business, having equity in a much bigger global national business. And you're basically, it's an equity swap, right? But it creates enormous net worth, potential liquidity if you need it, or borrowing, or whatever, however you want to structure it. But it opens up the ability to increase your bandwidth, your net worth, your life's work, and not having to sell your whole business by doing so.
Yeah. Yeah. So let's talk about that a little more specifically. So we talked about Summit taking from minority to, whole acquisitions. And I want to talk about who the target is, but let's say it's an independent firm or whatever, a practice comes from somewhere else. But is there also an equity class in Summit that these advisors have access to participate in that future value?
Yeah. So the answer to that question is no, and I'll tell you why. Right. There are so many stories out there where, as you and I both know, right, the deal is comprised of cash and equity, and most of the time the equity is probably not worth the paper it's written on because of all the reasons we know it's out there. We didn't want to do that. Our model is structured where you get a cash payment, right, and you get that. It's not some kind of over 20 years. You get that up front. And if you choose to have equity, you would have equity only in the entity that's making the acquisition. So there's no leases, there's no people, there's no phantom accounting. It is purely the equities in the business that's acquiring the business. So that's called Summit Growth Partners. That's been a huge success. We've paid a dividend out from the first quarter. It continues to pay dividends. As you can imagine, there are very little expenses other than some kind of annual auditing on the accounting side. And to me, that's real equity. that you're buying, if you're selling something and you're getting real cash flow, you know what that number is. Buying into a major company like Summit that has offices around the country, has several hundred people, leases, and that there's no control. That the person buying that has no control, just like buying any other equity stack. So that's the difference in our model, Corey. Most, if not all, of our people have elected to take a piece of Summit Growth Partners and take a piece of cash. But just like Marty's model, it's up to you, right? You can structure it the way you wish to structure it.
Yeah. Yeah. And I want to bring that out because I think it is something that distinguishes Summit as the Summit Growth Partners option. Because listen, there are many of the other competitors out there that you have that are selling people, and they want them to take 20 or 30% of purchase price in equity in the whole operation. And there are arguments for that. There are arguments against that. But the big thing about the series is to really be able to show the differences to people. And clearly Summit has a clear philosophy on that and why you do it that way. And what I always say to my clients who are buyers at the rung below the big boys like you is having a clear value proposition with a clear model and a clear structure and clear strategy that you can articulate is great, because not only does it attract the people who are attracted to that, but it actually repels the people who are not interested in that. And then you don't waste time on them. So I think Summit Growth Partners is a different value proposition. So getting into that, the value proposition and who you target, right? There are some of the other folks out there we've talked to that target only independent firms, buying independent firms. There are others who will take people off and teams off of IBD platforms. There are some that stay away from the wirehouses, some that do wirehouse deals. Just to make it clear for folks, who on that spectrum are you attracting? And then I think you explained most of the value proposition, but if there's anything else around the value proposition to each of those groups, please feel free to share.
Yeah, it's a great question. So what we're seeing right now is almost a 50-50 split between folks that already have their own RIA, and all the reasons that you and I know, from frustration to I don't want to run a business, I want to run my client practice, that approach.
Yep.
To the other 50% is folks that have spent their career at the big bulge bracket firms and just had it. Like, enough's enough. How many checking accounts do I have to sell before my comp gets cut again? I don't sell checking accounts or loans. So it's that frustration. I want to make sure I'm clear on the first piece. The folks that do have an RIA, we have several investments where they retain their ADV, right? So this is not you have to join Summit's ADV. If it comes from a wirehouse, why you'd want to have your own ADV, I don't know. I mean, I'll send them to you. You can tell the good reasons why not to. But that's most of the folks that leave the big bulge bracket firms are joining Summit's ADV. The folks that already have their own ADV set up, I'm not here to say what they're doing is wrong or right. I want to empower them. If they feel it's in their best interest to retain their existing ADV, I'm not here to fire their people. It's their company, right? We just want to give them the resources and the tools to grow. So we have several investments that are several $1 billion of AUM actually that is not on our ADV, right? That those firms retain their own company, they have their own brand. And you probably wouldn't even know we're involved because we have a minority stake. So there's no disclosure on that. When you look at the capital that's put out there's been several $100 million of our capital, right, between Summit, Merchant, and all that's been used to make those acquisitions. We're just not out there in the press every single day talking about it. But the model gives you flexibility. So if you want to have a turnkey model where you come in, the firm does all the compliance, all the stuff that nobody loves to do that I know of as an advisor, and you can leverage the resources of servicing your clients, then you're on Summit's ADV. Mm-hmm. If you already have a firm that has people and processes and you don't want to do it, we keep that in place. And it's kind of that menu example I cited earlier. Like, you pick and choose what you need from us. Sometimes it's capital, sometimes it's financial planning, sometimes it's our attorney, sometimes it's the investment management, sometimes it's technology. It's your choice, right? So it's a model of flexibility, and it needs to make sense. This is not a cram down. This is absolutely not a one size fits all, and it's our way to highway. You have to meet people where they're at, Corey.
Yeah, and I think that's something that is really such a big part of Summit's value prop and different from some of the other firms out there, is that You really do. I mean, again, our ADV, your ADV, right? Our brand, your brand. Our, this menu of service, you can take all, some, or none. We can buy in a minority or do a full buyout. You can participate in Summit Growth Partners or not, right? I mean, the
Right.
level of flexibility in your model, I think, is something that really does distinguish you and gives people some, optionality, and they're not, so, it could appeal to a broader range of folks like that. So that's great. All right, there's one other sort of chunk I want to cover before we come to the final two questions, and that's around what you're seeing in the industry, in the market. Obviously, we had good 10, 12 years, run on the bull market. Everybody looked like a genius, to some extent, although, anybody who's got to the underlying metrics found that a lot of these firms that were growing because the market was going up, their real organic growth was a lot less. But you know how it is. I mean, a bull market can hide a lot of sins, and there's a lot of tailwinds for a long time. Now, I mean, I've said it before. My listeners know. I mean, I think certainly the medium to long term trends in this industry are so positive, just because of demographics, because of the growth of the independent space, because of the fact that no matter how much consolidation there has been, there's more
Right.
new advisors coming
Right.
into the space, leaving the wirehouses and whatever. But we do have some short-term headwinds potentially, right? Interest rates higher, cost of capital higher, inflation, although it's starting to come down. The markets have been, I mean, lately maybe a little better, but shaky. What are you seeing in terms of the markets, and particularly its effect on deal flow? Are you seeing an impact on volume of opportunities? Are you seeing deal structures change, valuations change? What are you seeing out there?
Great question. I'll start off by saying having been in this space for quite a while, right? It's never as good as you think it is, and it's never as bad as you hear.
Right,
It's
that's right.
somewhere in the middle.
That's right.
This whole downturn, right? I think, not I think, we know it caught everybody by surprise, right? And now you look back and say, oh man, the Fed said they're going to start tightening. What were we doing? What were we thinking, right? Because we were living on, as you said, 12 to 15 years of pick a stock, it goes up. If it
Right.
doesn't go up this month, it'll go up next month and triple. This is where I think, this is where you separate the average from the exceptional, right?
Yeah.
Most people that watch CNBC and watch the news are just, I hate to use that name, the fake news, right? They just get sucked into the flavor of the day. And if you do that, you're going to miss something. Good, up or down. Having the resources around you, whether it's subscribing to great services or having a great internal team, I think is critical during this time, because the average guy is just going to give the canned speech. Stick in there for long term. Don't trade stocks and all that stuff. I think if you have the resources around you, and our financial planning group has a great example. I mean, that's a heavy 7 figures a year that we pay. We don't charge the advisor for those fees. We're just picking it up as a service to help them. But that's winning business for them every day, right? Everything from the Secure Act to a lot of these new things that were recently announced. If you're a retail advisor that's just watching the tube and watching the market go up, you're going to miss that.
Yeah.
So I think if you really want to organically set yourself apart, you got to find a way to separate from the noise and focus on the opportunity. One, is the right thing for you as a business leader, but two, it's also the right thing for the client. Don't fall into the propaganda what everybody else is. By the time everybody else catches on, it's already, you missed a big piece.
Sure.
That's just my paid commercial on try to be focused and stay ahead. We do that as a firm. We try to give advisors every week, some tidbits of, hey, here's what happened last week. You mentioned inflation coming down, CPI coming down, non-farm payrolls, all that. Okay, that's good headline risk, but we try to look at the trends. What does this truly mean? And by the time everybody sees it, it's already baked in there. Now, the second question was on deal flow.
Yep.
We're seeing a combination of two. We're seeing a bit of a, oh my God, are the best days behind me, right? That kind of thinking. And we're also seeing, well, I heard so and so got a multiple of X last year, and why is it? Well, it's the business is down 20%. You're not going to get the same numbers. But we are, believe it or not, seeing more and more people realizing, I really shouldn't be doing this alone. I really should be doing it with a a team, a partnership, or whatever, something that can help me get to that next level, whether it's Summit or Mariner or Sanctuary. I don't know. That's up to the advisor to choose from. But you need the resources to make a difference. I don't think the next 12 to 15 years are going to be like the previous 12 to 15 years. I mean, you're going to have to be surgical about decisions you make. You're going to have to stand out above and different from the competition. And the folks that do that, I think, are going to just, to your point, just explode on the upside and do great. And then you'll have people that kind of survive, which, those are the complainers, like, life's never great. But the guys and gals that are just doing that surgical approach, like viewing this as an opportunity to differentiate yourself, I think they will do great.
Yeah.
They will ton it.
Awesome. Before I ask you my final question, where can people find out more about the Summit?
Paid commercial. Thank you, Corey. Well, summitfinancial.com. So Summit's based out of New Jersey, Parsippany, New Jersey. Anybody that's listening is free to call myself. Ed Friedman is our head of business development. You can call Ed. We've known Ed. Obviously, Corey, you and I have known Ed for a number of years as well.
Yep.
But we'd love to speak with anybody who has an interest. And who knows, maybe we can do some together.
Excellent. Excellent. So Stan, the final question that I always ask on the podcast is about my highest value in life, which is freedom. And for me, that means everything from freedom around the world, from all people from oppression, to the reason I haven't had a boss in decades and I'm an entrepreneur. What does freedom mean to you, and how does it impact your life and business?
A lot of the same things you just mentioned, right? So we've all made a decision. Anybody who's gone independent's made a decision. When they look in the mirror, the boss is the guy in the mirror, right? So that's a big piece. And sometimes it's scary. Sometimes you don't like the person you see in the mirror.
Sure.
Right? But it is the freedom, right? I mean, I've been blessed with working for these big multinational firms. And, if I add up all the money my groups have generated for the firms, it's been in billions of dollars of profits. And myself, I didn't make billions of those firms. The people that work with me didn't make billions. The firm made all that money. Being on your own and being independent, having your firm, you get to benefit from the upside. You also get to have to deal with the downside. But you set your culture. You set the way you want to run your business. Speaking of Summit, I can't be more proud of the way the organization's been run for the previous 35 years to me getting here. The way the team rallies around people today. There's a culture of caring that I see in this type of world that you and I are in versus in the past. Listen, I'll give you experience. I'll give you stories. I've seen people have heart attacks, drop dead at their desk. And they're giving out the book, and within a few minutes they're just giving out stock, client pages. I mean, there was just no caring. Nobody cared about you. You were just a unit of production, and when the second your production stopped, it didn't matter. So this is a more humane way of being on this earth. If you're going to be in business, do it in something that you can control and enjoy, and get the rewards for. Get the rewards not just financially, but what your business looks like. And one day, when it comes time to that, you want to step away and sell or monetize, you have that option. You make that call.
Yeah. Stan Gregor, thanks for being such a great guest on the DealQuest podcast.
Oh, Corey, thank you. Have a great 2023, man.
Yeah, you too.
Appreciate it.